I tell people I've been in the business a long time and I've seen a lot. Somebody who I have been in business with, step for step, stride for stride. We started together. We started in the same location, started really in the same little niche, and now we have a chance to reflect back over a period of time. Steve Somerman, who's a branch manager of PRMG Mortgage, and focuses or does a lot of business in reverse mortgage. Help me get this podcast launched. Steve, thank you for coming back to the program.
Well, thank you very much. I appreciate the opportunity.
So, like me, I started the business in 1986. That's about when you started?
January 26, 1986. I'll never forget that day.
Okay, I started in March sometime. I think it was March 1st, but okay, close, same time. And I started in Claremont, but my territory is Diamond Bar, and I think you were in Diamond Bar, or that's where we overlapped at the time, right?
Yeah, I basically picked Diamond Bar as my territory back then, and
No,
it worked out really well. It was a lot. There were some growing pains, but once I got a hold of the ability that I possessed, not somebody else possessed, that kind of gave a sour name to the company I was with.
mm,
I basically tell people, hey, I am not Joe Schmo. I am Steve
mm.
Somerman. Let me fail and yell at me, but I'm not going to fail.
I think that's a key thing to think about, that back when we started, that wasn't a common thought, that we started the business, you really took on the company branding and culture and values and principles 100%, and yet they treat us like we're independent contractors. We're paid on commission. They didn't guarantee us any business. And I think a lot of those companies misused that trust. And today I tell people, it doesn't really matter what company with. I know that your company's one of the largest in the country. I know one of your executives, Barron, for a long time as well. But that means nothing to me. If I do a deal with Steve Somerman, it's because I believe you'll take care of it for me.
Yeah,
And that's true
exactly.
with forward mortgages or reverse mortgages. That hasn't changed in all these years.
And I have relationships in Diamond Bar that are over 30 years old.
Wow. Wow, good for you. So I know you started the mortgage business as I did back in '86. And in those days, the reverse mortgage didn't even exist, I don't think.
And it kind of did, but didn't.
Okay. And it came out kind of what I call version 1.0. And I dabbled in that back then. I was originator at that time. Did a couple. I thought it was very powerful. It was obviously misused. And that led to a whole rewrite on what I refer to as reverse mortgage 2.0,
Which
version
was
2.0, with a
2017.
lot of protections for the customer. So talk a little bit, I know you've been in it for a while. Talk about the protections for the customer that exist today that didn't exist when the reverse mortgages really kind of became more popular originally, 10, 15 years ago.
Well, there's a lot of myths. So today, the reverse mortgage, the individual will take title in their name or their trust. So it's like any other loan. You are on the deed of trust. You own the home. It doesn't go to the bank. Okay. The other issue is the amount of money that you can get and the protections of it being a non-recourse loan, whereby if you pass away, they reverse mortgage has 490-day periods for you to sit there and dispose of the property if it's in a trust or it's in a will. If it goes to probate, God forbid, you have probate in California. But well, you know about that.
That's where I live.
Yeah,
You don't want to
exactly.
be there.
That's your campground, man. I'm not gonna touch it.
Well, you want to avoid it. I mean, the whole point of if you're going to do reverse mortgage, we're going to talk about a little. Well, I didn't mean to interrupt you. Go ahead, and I'll come back and ask a question.
Yeah, so that they will reduce the mortgage amount or the appraised value, whichever is less, by 5%, so that the heirs have funds to sit there and dispose of the property,
Right.
whereby before it was like parents died, get rid of the property, we're taking over, that's when people experience the bad part of reverse mortgages.
Right.
To today, where after I think it was October 2017, the new guidelines were installed, and they're so much more better. They're so much well received. There's a lot of proprietary products that have come about of reverse mortgages for people that have loan amounts that are greater than what reverse mortgages normally would lend on for FHA. So it just created a wealth of opportunity for seniors to sit there and use the equity in their homes to live on and not have to make a mortgage payment, but just be responsible for their maintenance, their taxes, insurance, HOA dues, etc. And creating a real great model for opportunity where the senior today can actually look at planning their retirement around a reverse mortgage, even in their 50s, so that when they become 62 or 65, they're prepared to pull the trigger on it because they've done their homework. And then the people that are over 62 or 65, that's where we come in and see where they're at. And of course, you have to have a certain amount of equity based on your age, the value of the property, and what's owed on the property. But it just really gives a great amount of opportunity to a lot of people. I've closed, oh my gosh, since we spoke, I've been averaging 2 or 3 loans, which for reverses it's a lot, a month. I've got 2 that I'm turning in today. I got another one that I'm taking. I got a reverse for purchase that's out there waiting to be accepted. So it's great.
Hold on, you cover a lot. There's a lot to unpack here. I know you're real sophisticated, but most people watching this are going to be the real estate agents or regular mortgage originators looking to get into the reverse mortgage space. So let's unpack a little bit of what you said. The use cases, you mentioned that you have loans you're turning in. One is reverse for purchase. Now, I have to tell you, I'm a real estate agent. I'm a broker. I have been pretty successful by most standards for years. I'm a pretty smart guy. Like, I'm more smart than I am hardworking, I think, or I'm more smart than I am charismatic and good looking. Yeah. And yet I didn't know. I was shopping for a house for personal reasons. I tell a story a lot, but I'd love to live in Florida. I used to live in Florida. I met my wife and we were married in Florida. But we have a house here and our grandkids are here. And I can't afford to sell this house and use it. I can only use excess savings. Well, I don't have enough to buy a really nice house in Florida, but I had about $500,000. I was shopping around, couldn't find anything. And a reverse mortgage originator said to me, well, you could buy a house for like $850 and get a $350 reverse on top of your cash. If you're going to put $500,000 down, why not get a reverse? I thought, you can do that on a purchase?
Yeah.
I didn't know that. So let's first talk about, tell me about the case that is real. Obviously, there's some privacy issues, but what can you talk about when somebody uses a reverse mortgage as a purchase tool as opposed to just a refinance or financial planning tool?
So first of all, the amount of down payment that you'd have to come in with is basically the same percentage of equity that you would have of a normal reverse mortgage. It's just inverse, where instead of receiving the money, you have to give the money. Mm-hmm. So, for example, I'm looking at a borrower that is just 65. To me, that's a young senior.
Well, thank you. I appreciate that because I'm 66. So
yeah, I know I'm 73, so I can talk about that. But she's looking at a $435,000 condo, and rather than pay all cash for the condo, she only needs $288,000 to get in. Beautiful. Which then leaves her $175,000 to live on. So the mentality is you basically have to back into what a buyer can qualify for based on the net proceeds of a sale or however much money they have to sit there and purchase a house. And then once we have their age, we can determine the amount of house they can buy when we know the dollars that they have and are able to invest.
At what stage can they close the purchase side? Do they need the sale to, because there's, again, imagine some sort of a primary residence issue or a debt service issue. So can they close on the purchase as long as they're listing their house? Can they close the purchase once it's under contract, or does it actually have to close before they can?
The reverse for purchase is owner occupied only. You have to have the proceeds and the ability to purchase the house because you're going to move into it.
Yes, that's what I thought. And so when I was looking at Florida, I thought, well, I could move to Florida and spend enough time of the year, over half, to avoid California taxes and have my family vacation with me in Florida a couple times a year, and then come home a lot. And I thought I would save, I took all the tax savings, I could spend that on travel to Florida. Well, that makes a lot of sense to me. Now that said, my wife wasn't keen on it, so unless I get divorced, and I can't afford to get divorced and move to Florida, I can afford to get divorced, lose everything, and go to Florida penniless. But that's not really what my goal was. So, okay, so that's reverse for purchase, which I as a real estate broker, I'm thinking like every single cash purchase, not investors, not flips, but
Right.
cash purchase to live in for primary residence.
If you're over 62.
If you're over 62, should include a reverse mortgage, every one.
Yeah. And then again, the proprietary mortgages, you only need to be 55. Now, the amount of money that you need to come in is pretty much the same as percentages go, but the proprietary mortgages are available for values over $400,000, or at least a principal limit factor of $100,000 in most cases. So as long as you meet those criteria, you have the ability to sit there and get a reverse for purchase and basically maximize the opportunity of living in a property, having the loan balance increase, because that's what a reverse mortgage is,
Right.
but keep those extra dollars in the bank with your financial planner, or wherever it is that you want to invest them.
Right.
All right. And let them be part of your retirement.
Yeah, and I think that's, to me, that's a no-brainer. Anybody who is buying a house, or if you're a realtor, any client of yours who's buying a house for cash, who's 55 or over, look at proprietaries, or 62 or over. There's all kinds of options available for you. At least look at the option. At least run it by your client. At least try to be the hero, because it doesn't cost anything to bring them the option, and it may or may not fit them.
Right.
But I think it will. My thinking is we should be doing 10 times the reverse mortgages they're doing today, just for lack of understanding of the product.
Yeah, I really think that when you paint the picture, especially in today's California property values, and you're 65 years old and you need to come in with about 58% down, okay? But if you want to live in a home and you have the money to pay all cash for that home, to come in with the 58% down of that sales price, if you're 62 to 65, makes a hell of a lot of sense, because the difference goes right back into your pocket, and you can sit there and use it for whatever it is you want to do to invest.
So then, when this product first came out, it seemed the most common use case was the desperate homeowner who had nothing but equity and couldn't qualify for a loan. Now, there still is a use case to help that borrower. I mean, that might be a case. But really, the growth opportunity are for people who can afford to pay cash or afford to refinance, but the reverse mortgage offers them tremendous flexibility and security and safety in a way that doesn't, if as part of their overall financial package. For example, there are people who have huge retirement funds built up, and they just routinely pull out dividends, interest, or sell stocks. Yet, if you're able to get a better return on your money than you would on the mortgage, that might not be the right choice, or that might not be the right choice 1 year when you have a lot of taxable income versus no taxable income. Talk a little bit about the flexibility that a reverse mortgage gives somebody when they're putting their financial plan together.
Well, I think they have to think about how much wealth and health are two big important things to me. Health, I'm healthy, okay? But the wealth part is always a work in progress. And I think that the opportunity of utilizing a reverse mortgage, even though the loan balance is going up, to have the available funds to sit there and set up your retirement in a position where you're maximizing your equity to get as much money as you can liquid, to sit there and live on that tax-free money, then pull out from your 401k or IRA, where at some point in time you're going to have to pull at least 10% of it out, and it's a penalty if you take it before you're allowed to. So to center your retirement savings around the cash, again, tax-free cash, it's like a refi. When you pull out cash from a refi, right, you're not paying taxes on it.
Right.
Well, a reverse mortgage is the same thing. It's just your loan balance is going up instead of going down. but the money is yours to utilize is how you see fit. Now you can
Until you sell the property. And
it's
if you don't sell the property in your lifetime, then it voids, and then it gets deferred off into the future. Or
yeah, so you can utilize those funds before you have to sit there and really tap into your 401k or IRA.
Yeah.
Or you can pull the minimum amount out that you must take,
right,
and still have this nest egg that you pull out of equity from reverse mortgage and live on that until such time that money is gone.
right.
And now you can sit there and pull your retirement out, but now you're pulling your retirement out because that's what's just left. But how much is that retirement grown in 5 to 10 years? Because you didn't have to take it.
Right.
Or you only had to take the minimum required amount. It provides a great wealth of opportunity to a senior to sit there and know that they have that option.
Right.
And if they didn't have that option, then why the heck am I in the business talking about reverse mortgages?
And this is why major corporations, even with large cash on hand, also have borrowings, because there's tax advantages at times to borrow something and pay for it rather than to pay cash for it or liquidate assets that are generating revenue for you. And so again, this isn't for me or Steve to tell you what to do. This is for me or Steve to say to you, make sure you ask your financial planner, is this an option for you? Because you want to open up options. And I think the other thing about it is you can use it when you want to and when you don't. It's a line of credit at some point that it grows, the amount of money you can borrow.
On an adjustable rate, you're right. So today the adjustable rate is 6 3/8% on an ARM, 2 3/8 margin, for example. Well, the growth rate 6.875% on the unused portion of that money.
Right.
I don't know if you remember her name, but her name is Beverly Mount. And I did a reverse mortgage for her and her husband. Her husband passed, but he had enough money in the home in Diamond Bar where she basically was living off of what the growth factor was on the unused portion of the money.
Beautiful.
To pay for the loan.
Beautiful.
You know, it's just a winning situation when the numbers, everything aligns and you have a free and clear property. And now you've got all this money that you can utilize
right,
to set up your retirement around.
right.
And then anything else that you have, again, 401k, IRA, stocks, bonds, whatever, but they're stuck in an IRA or 401k where you have it's required that you have to pull money out after 73 years old. Then you pull out the minimum and use your reverse mortgage proceeds to live on.
Well, then also if you have to pay for something, one-time kind of expenses, and want to defer it, you can use your line now, and then next year maybe liquidate. Like this year, I have a really big windfall on my income, which is great. Mm-hmm. The bad news is anything I sell and have taxes on is going to get taxed. I would love to not have to sell anything more until next year. So if I had and I have a reverse mortgage, I haven't effectively do that here yet. But if I did, I could just borrow against that to pay for whatever the one-time expense was, and then maybe repay it next year and defer at least the taxes for a year, but maybe at a lower tax rate because now I'm at a lower rate. So again, nobody's suggesting this is your solution. We're saying this is a tool in your toolbox.
No, just an option.
And you need to talk to your financial planner. If he doesn't understand it, and most financial planners don't, you need to find one who does. And so that's a good question I have also for you is, where do these loans tend to come to you from? Are they coming from past mortgage clients? Are they coming to you from professionals in the business? Where do you get the business of reverse mortgage? Because I think so many times when I mention it to somebody, I get somebody who's been as old as me will say, "Oh yeah, those are terrible loans. You only get those if you need them." And I know they all know what they're talking about, but they have a relationship with the customer. So how do you get these loans? And then do you ever talk to financial planners and try to educate them on this as an opportunity for them?
It depends on the financial planner. There are some financial planning institutions that just don't like reverse mortgages. Mm. They won't even let you talk about it. You can't even get into to have a meeting with them because it's just not part of their persona and the way they want to sit there and financially take care of their clients. And if they would just listen and see the advantages of a possibility of a reverse mortgage, then more of them would. Most of my referrals come from past clients
Right.
or loan officers from our company who want to who have a client that needs to get a reverse mortgage, and they refer them to me. And it's feeding me pretty well right now as far as the amount of loans that we're doing.
Nice.
And I would really love to find a niche with financial planners who are basically self-employed financial planners rather than the industry financial planners, because the industry financial planners basically don't like reverse mortgages.
Yeah, it's interesting you make that case. I think you're right. It's a challenge. I think it's one where we just have to keep educating our customers, make sure they ask the question, and try to get into their heads a little bit. So, you and I have both been in the business quite a while, again, since 1986, so do the math. 39 years, coming up on 40 years for both of us this year. You know, I'm surprised at how there's not a big population of young people pushing us out of the business. Like I feel like I should have been forced out 5 years ago. When I was in the business, I was a young, hungry buck.
Right.
And I ran over people my age. I ran circles around them until they were exhausted. With technology, it's obviously expanded my career. But I also think part of it is I found my niche in business being probate and trust related, reverse mortgages being a piece of that, causing probate problems and such. And you have as well by expanding into the reverse mortgage. So talk to maybe that new originator who's struggling. Maybe he's at PRMG, maybe he's at another company, and he's doing some deals. He's barely paying his bills. He's getting into debt. Or they want to build a career. Talk about the opportunity of them to specialize in reverse mortgage. What does it take to make that choice, and what do you think the opportunity is for them?
So I would talk to them first about the reverse mortgage opportunity. And one of the things that I would do is say, go on to Amazon and get this book. All right. It's called Understanding Reverse, Simplifying the Reverse Mortgage by Dan Hultquist. This is edition number for 2022. He usually upgrades it every couple of years with the financial changes, but you want to get a good feel for what reverse mortgages are, and you could come to a point where, and I'm not yet, I'm probably going to do it this year, is be a certified reverse mortgage individual, get your CPM license, okay, for reverse mortgages, and be certified as a reverse mortgage specialist. The idea of having a niche in today's mortgage world is going to differentiate you from all the other lenders out there, because once, like, the big three for me are non-QM, reverse mortgages, okay, and first-time homebuyer programs. That's it. Anything else that comes to me, it's because it's somebody I'm already working with, and it's a referral. But if you just surround yourself and utilize technology with just 2 or 3 niches, then the other opportunities of loans are going to come. Right. And I think today's youth, they want to make the big money now. Right. And a lot of them don't have it's kind of like what you said, they don't have the temerity or the strength to sit there and fight through 6 to 9 or 8 months or 12 months or a year without making a lot of money. And then they leave the business I can't tell you how many times a loan officer left the business, and the day they leave, the phone rings and there's a realtor saying, "Oh, is so-and-so available?" "Well, why?" "Well, I got a borrower," and he's not. "Oh, well, take care of it. He left the industry, but I'd be more than happy to help you." Right. I'm sure you've experienced it too.
No doubt.
And it's like,
don't quit before the miracle happens.
You got to stay especially now. You got to just weather it out.
Yeah, I would say that there's a lack of willingness to endure. You see this in every aspect of life, though the people who do get all the rewards, right? Yeah. The young people I meet who are hardworking, disciplined, on the hunt, have a hustle muscle. I see some people who are young who just make fortunes or have huge businesses or have fantastic businesses. And I see people who don't, routinely struggling. And it's always, they just can't get started. I see it all the time. In fact, I tell a story. There's a guy for exercise, I walk in my neighborhood. I go on a 3-mile walk, and I wear a headset. And I listen to something educational, or I'm on the phone, and I'm walking. And there's a guy who sees me. He's a friend of a friend, and he tells me he wants to be in the business. It was like a year ago. He had his license. He got out of it. What did you get out of it? Well, the answer is he didn't work hard enough to get enough deals to stay in the business.
Right.
And I pass him every month or so. I'm getting ready. I'm going to pass my license. Like, whatever, dude, I'm working. Like, I'm exercising now, so I go back to the office and get to work. And I think that's the thing. To anybody listening to this, you could learn this niche and be a master at it, but you got to put the time in. You got to put the effort in. You probably have to start with a company that's going to pay a little lower commission and hold your hand a little more and teach you a little more. Or you might have to be mentored by somebody in your business or further in business to get started. And look at the beginning as your education. But anybody's going to put the time in today. I just think all the rewards are open to you. You just have to put the effort in.
Yeah. Our model here at PRMG is basically the loan officer can refer a loan to the reverse mortgage division. And any of the 4 of us that are in the reverse mortgage division nationally will get that lead. And if we're not licensed in that state, we will put them as the referring LO and I'm the LOA. And I basically say, just get out of the way, help me get the borrower's initial documentation and watch what happens.
Right. And that's what happens where I think sometimes people look at that and say, well, I'm going to split my commission with somebody. You realize here's a guy who's been in the business 40 years. Like, in college, you pay for that. It's called tuition.
Yeah.
Here in our business, you get a referral fee while you refer that business. And I talk to agents all the time, but why don't I have to pay you anything? Okay, well, good luck. And I'll be in the business a year from now and you won't be. So, it's tough. It's tough. It's a tough challenge. People who are desperate want to hold on to every penny. And I think that's the mistake coming from scarcity like that. So let's go back a little bit to the beginning.
Okay.
And yet now, in that, obviously, mindset must have been an important part of this. I mean, I don't think you and I talked about this back then. We met in the field and talked about deals and such. But you must have had some practice or some process that kept you focused in a positive way when you started to get through where you are now. And you must still have something going on positive in your mindset to keep you going at the age you're at and the age we're at. You don't have to work at this point. I don't have to work anymore. I love it. I'm making really good money.
It's too easy to quit. I'm sorry. It's just, I mean, I know that sounds ridiculous, but if there's a loan to be had and it can provide me with an income that is sustainable for the course of a year that puts me in 6 figures, why am I going to get out of it?
Yeah. Well, I think also probably like you, I've learned how to structure my day to where it doesn't interfere with the rest of my life either. I still get my exercise, my family time.
Yeah. I mean, if you can kind of see behind me that little diploma. I train jujitsu. I'm a 2nd degree black belt in jujitsu.
Wow.
It took me 8.5 years to get a black belt. I mean, it's hard. But like you said, I've always been able, and I've always had the mentality of work hard and work harder.
Where does that come from?
It's just the way I grew up. I came from the Midwest. I mean, it was the Midwest mentality. You just got to work hard to get somewhere.
How do you keep it today? You've been out of the Midwest for at least 40 years I'm aware of.
Oh, gosh, for a long time. It's just a mentality of being a competitive athlete. And that competitive athlete, even though I'm 73, I get on the mat with guys that are 100 pounds more than me and 40 years younger. And I'll go 6 minutes with them and let's see what happens.
Wow.
I don't care. So that's the mentality I take in to work.
Right.
You
use the word they're competitive. I think that's something also that has been downplayed in education from when I was a kid. I was competitive in Little League and football and basketball and racquetball. And then in high school, I wasn't good enough to make teams, but I was I played sports all the time. But I was on the competitive debate team. That got me into college and at a high level. And I think being competitive like that is a healthy thing. It develops discipline, desire.
I think longevity and health creates the wealth, because if you're not competitive in your 20s, 30s, and 40s, you're not really going to make it.
Yeah.
You know, people will say, well, he's full of crap, but you know what? The numbers prove it.
Yeah.
The people that are successful have some type of competitive thirst that drives them to exceed the expectations of what people thought of them.
Yeah.
And that's kind of what the pick the niche to be rich mentality comes from. Yeah, specialize in reverse mortgages, specialize in non-QM loans. Be the differentiator where, okay, this is what I specialize in, but I also do FHA, VA, conventional, and jumbo loans too. So now that I've done these reverse mortgages and these non-QM loans for you, how about we share a little bit of more of the pie, and I'll do the same thing on the other loans as well.
Nice. Nice. Well, look, Steve, I know I've got a little longer here than I signed you up for, so we can go on for
I could talk for hours.
You and both. I tell people you can wake me up at 2 a.m. and I can speak about this stuff for hours without any prompting. It's just, and I think that's the key to the people watching who want to get in the niches. Find something you enjoy, because if you enjoy it, it stops being the drudgery of work and becomes more the challenge or the competition. I want to be the best in my field, and I'm willing to put the effort in to do that. But it's kind of fun to compete, as opposed to. So anyhow, look, Steve, for people who want to get more of you, I put your website up. Your PRMG is the company.net/loan officer/Steve-Somerman. And then all his contact information is below on the website. If you want to reach out to him, his phone number 949-279-6051. As he mentioned, he's a branch manager and has a team underneath him of originators. He covers part of the country and has other friends who are other parts. Steve, thanks again for being on the call. I really appreciate always catching up with you and learning from you, and the inspiration you have in setting your physical competition as well as your business competition. Thanks so much.
Thank you very much, Bill. It's just great talking to you and having an opportunity to share what I think is a phenomenal program, and what you've brought to the world as far as the probate expert, the reverse mortgage piece. You're inviting people to learn. And when you have knowledge, knowledge is power, and power creates wealth, and wealth creates happiness. And I can't tell you how grateful I am that you had me back on, and I would look forward to sitting there and speaking with you again soon. And hopefully some of the changes that I talked about, especially the proprietary reverse mortgages, where you've got from 55 and up, there's an opportunity to pull equity out of your house and do something cool. It's fun.
And you stayed to the end. I got to tell you a little bit. In the old days, we didn't have online websites, and we didn't have Facebook click for ads and Google ads. Steve and I got our business by going out every day, putting on a suit, putting on a tie, walking in with a calculator, an HP 12C or some other calculator, stack of business cards, maybe rate sheets. And we went to real estate offices, mano a mano, trying to get past the front desk, meet real estate agents, some cold, some regular. We'd pass each other a couple times. Yeah. Sometimes agents would pit us against each other. I mean, it wasn't quite jujitsu, but it was pretty competitive.
It was competitive. And you know what? Once you get past the gatekeeper, which was the receptionist, one of my secrets is make the real estate office your office. Yes. I would sit there and go, hey, Wendy, can I just make a quick phone call? I'm waiting for John.
Yes.
I'm not really waiting for John, but I'm using it as an excuse. And I'd go in the conference room and I'd be there for an hour and a half. And invariably, in that hour and a half, somebody would come by and says, are you available right now? I got a buyer that needs to be pre-qualified.
Exactly.
And bang, it works.
Right. Yeah, the agent would be there and they're like stepping up. I'll do that for you. I'll go in your conference room. I'll stuff you around. And you're just sitting there looking around for anybody to walk in the door to talk to. Yeah. But the thing I always say is it was competitive in that, we wouldn't physically, but we would kill each other emotionally or logically or in a competitive business sense. It was appropriate. And yet we were also friends. We also would share insights.
We would shake hands at the end and say, hey, you know what?
Yeah.
Got your piece of the pie. I got my piece of the pie. No big deal. It's all good.
Yeah, I think, and that's the unique thing that I think we don't have today. Business has become so anonymous. I'm trying to kind of recreate that on this podcast, as I've had originators from every major reverse mortgage company in the country, and I want to invite anybody to come on, because this is about educating customers and raising the standards of professionalism. And I'm a real estate broker. I'm not doing reverse mortgages. I don't get paid by any of this. I do get paid when people refer me probates. I do get paid when people refer me real estate that has been sold. Don't get me wrong.
Yeah.
But I'm not doing this to promote my reverse mortgage business. I'm here to promote the concept of reverse mortgages as a tool to help people accumulate wealth. And also, second of all, don't just call an 800 number to some unknown company. Call a professional who's seasoned, reliable, and worthwhile, like Steve Somerman. So, Steve, thank you again for your time. I really appreciate it.
Thank you very much. Appreciate the opportunity.
And for the rest of you, this is the Reverse Mortgage Podcast. I have a new issue that comes out every week. We typically interview top originators like Steve to talk about the business, sometimes vendors. But the idea is that every day we want to raise our standards, educate ourselves, and educate our customers on how to increase wealth and achieve their goals. If I can help, I'm Bill Gross at Bill Gross Probate on social media. As always, reach out if I can help you and make today your best day ever. Thanks so much.